So if we can have everybody find a seat, we're going to get started. Wanted to start with that video just to give you an overview of all of the open space and various steps that has been taken here in Rossmoor. This is a video that we actually shared with a lot of underwriters to demonstrate how safe this community really is. So good morning, everybody. Good morning. It is always a real pleasure to be here with you in this community. My name is Jeff Matheson. I'm the general manager for the Golden Rain Foundation. I wish today was a little bit different circumstances that we're with you today, maybe a celebration of some sort, but we are really here to address a crisis that has been facing this community for the past year. But the good news is this community rises to the challenge of crisis. And this community is governed by residents, has resident participation, and this crisis is no different. We have tremendous support from all of you and from the community. This community right now has a task force made up of mutual boards and president representatives that has been working on this issue for well over a year. This community has a FireWise committee that has been working to get and has obtained a FireWise certification. That is really important. If you have not done so, you should ask your personal insurance agent if you can get a discount on your HO6 policy based on the fact that Rossmoor is now certified as a FireWise community. So thank you to all of the folks that have been working on the FireWise committee. We have organizations such as CERT, such as EPO, that works with the community and gives education and demonstrates the importance of fire preparedness, emergency preparedness to help our residents in the event of an eventual or a catastrophic type event. So you are ready. So thank you to those folks. We have a board, a GRF board, that has been working to meet with legislators to demonstrate the challenges that this community has been facing with this crisis and seeking guidance and help from those elected officials. So thank you to the board for that effort. This community is active in making a difference. Today is another step towards that process. Today is an opportunity for you all to get engaged in the process, to make your voices heard to your elected officials. At the end of today, I'm going to review, and many of you have already picked up the form on how you can make your voice heard in working with a partner agency, CAI, to help contact and tell our story to your elected officials. So I'll go over that at the end, but this is a good opportunity to make your voice heard. So the community is certainly in a crisis with the insurance challenges. We have what is called a master insurance policy that covers 22 of the mutuals as well as GRF trust property. We have coverage that is very robust. We have limits of $1.16 billion in coverage for property insurance. Our coverage will provide 100% walls-in replacement value coverage for any loss up to that coverage limit. We have benchmarked our coverage on modeling that is nationally recognized modeling. Our modeling shows that a loss in this community for a 1 in 10,000 year event would be about $1.22 billion. So we are in line with a 1 in 10,000 year event for our coverage. That is pretty robust coverage. But the challenge is that coverage, the cost for our coverage is escalating continuously, and you have all felt that in your coupon increases. We have gone from $22 million in 2023 to $22 million in 2024 for coverage, and that is for only 43% replacement value coverage. I want to just take a second to explain the difference between 43% replacement value coverage and full replacement value coverage. Our policy, the master policy covering your property, will provide 100% walls-in replacement value coverage for a loss up to our limits of $1.16 billion. So you are not just covered to 43%, you are covered 100% up to that limit. That's an important distinction. Despite all of our efforts in doing hardening efforts, your mutuals have been doing efforts, Golden Rain Foundation has been doing efforts. Despite all of that, despite our robust coverage, despite being within meeting a 1 in 10,000 year benchmark, we still are being rated as unwarrantable by Fannie and Freddie in the mortgage industry. That means new residents coming in, purchasing property, can't get a mortgage, a traditional mortgage. That means it impacts people's ability to get reverse mortgages. That is a true crisis facing this community. We are asking for legislative help so that when we demonstrate our community is taking every step possible to be safe, when we are taking every step possible to meet a reasonable 1 in 10,000 year event benchmark, that we should be able to meet the qualifications of the mortgage industry. So today we have with us some speakers to join us, and we are very pleased to have Senator Steve Glazer with us today. We also have the Deputy Commissioner, Insurance Commissioner with us today. And we have Michael Gallagher from Gallagher and Associates with us today. These folks have been key supporters of the Golden Rain Foundation and Rossmoor, and really helping us address this crisis, so we greatly appreciate their participation here today. So with that, I'd like to call to the podium Senator Steve Glazer. Over here.
Well, good morning, everyone. Good morning. It's nice to be back here in Rossmoor again, seeing some old friends. And I know we come here this morning in partnership because what you're experiencing, the frustration that's been shared with you, is something that's not new to me. We've had conversations going back almost a year with your leadership here. This is not something that is necessarily a surprise. Let me give you some context for that. You know, people say, why are we having a problem today? And there's a simple answer to it. It's an unfortunate one, and that's because of climate change. It's changing everything. It's changing the number of fires, not just little fires, big fires. It's changing the impact on rain and flooding. And the consequences are obviously, they're there for everyone to see. My staff gave me the stats this morning. In the last 5 years, 10 million acres of forests have been burned here in California, destroying 39,000 homes. Wow. That is a heart-stopping number when you think about each story that comes into play. And we've dealt with remedies to try to deal with that crisis over the last 5 years. I mean, there's been legislative remedies, which I can talk about. But going back to the perspective, 7 of the top 12 insurers in California have left the state or are pulling back on new policies. They include companies like Allstate, Farmers, USAA, American International Group. And just this week, State Farm announced it's not going to renew 72,000 policies. 72,000. You know, the number one zip code in the state for losing the number of policies? My zip code, Orinda. 1,700 homes not renewed this year by State Farm. And we have, 6,500 properties in Orinda? So you think about that as a proportion, it's massive. It's massive. So, and I know we're going to hear from the Deputy Insurance Commissioner in a few minutes, but more than 50 years ago, the legislature created the FAIR Plan, which is kind of an insurer of last resort. It wasn't like people not being able to insure their property is a new thing. It does happen. And so that was created to try to provide an alternative backed by the insurance industry so that if you couldn't get coverage, you could go to this very high cost but available place. In the last 3 years, the number of people in the FAIR Plan has doubled. It's over 350,000 people now, because they can't get insurance anywhere in California, have gone to the FAIR Plan. And of course, that coverage is a lot less than what you normally would like, and it's a lot more expensive, so it's not a good alternative. And it's supposed to be temporary. But what we're finding is a huge, 90% of the people that have been in the FAIR Plan are renewing because they continue to not be able to get coverage. So it's a bad situation. And the obvious thing for all of us is that insurance is not government run, it's a private enterprise. And so they're making calculations as to whether they can make money by insuring our homes. To get increases in rates to try to balance that risk-reward question, they have to go to the Department of Insurance and ask for increases. And the Department of Insurance, as we're going to hear, have used a formula for determining whether those rate increases are reasonable or not. And that formula has been based on a historical looking in the rearview mirror. And so when you look in the rearview mirror and you don't see a lot of catastrophic wildfires, is what we're experiencing now, they weren't giving very big rate increases. And so the marketplace started to get more and more out of balance, where these private insurance companies were saying, we can't get the return for the risk. And the Department of Insurance was saying, here's our formula. Sorry about that. We're not going to let you raise your rates. And that has really now contributed to what we're experiencing in the state. So what are we doing about it? What's the Department of Insurance doing about it? The insurance commissioner has come forward with changes that he's proposing in the modeling that's been used to determine whether or not a company can raise their rates. And that may provide the relief over time for the companies to get the rate increases that they think balance their risk of insuring in California. And one of the most significant changes that the insurance commissioner has said he's willing to do is to, rather than look backwards on historical risk, he's going to allow them to look forward at new modeling. And I know the insurance commissioner, the deputy, is going to talk about that. And he's also proposing another change, which is significant. And this is kind of getting into the weeds a little bit. But if an insurance company feels like, when they look at their portfolio of policies that they have written, let's say in California, and they feel like they've gotten too far over their skis, for any of us who used to be skiers, meaning that their risk is too high for what they wanted in terms of the solvency of the company, they have gone out into the wild west of insurance marketplace and tried to get reinsurance from global companies that would come in and say, if your losses are over X amount, we'll come in and help you and bail you out, that reinsurance. So that reinsurance cost has never been something that the companies themselves can apply to the cost of their policies that you and I pay. And so they've done that on their own dime, and it's made it another example of where it's made it unaffordable from their point of view to write more policies. So the insurance commissioner is considering a rule change that would allow that reinsurance, trying to spread the risk out, those costs of those reinsurance policies of being part of the rate setting process. So that's in the weeds, but it's very relevant, because at the end of the day, if these companies feel like they can't make any money by writing our insurance policies, they're not going to do it. And they're going to pull out of the state, or they're going to reduce their coverage, which is what we're experiencing today. And there have been some legislative reforms over the years, and there's a couple more that we're considering in the Senate. I'll mention them, but they're two-edged in terms of their impact. Senator Becker from the Peninsula has a bill that would allow companies, would require property insurers to incorporate mitigation activities. We heard a few minutes ago about the great work you've done here in some of the mitigation activities. Well, there's no requirement that an insurer has to take that into account when they calculate the policies, whether it's for Rossmore or for an individual homeowner. And that bill hasn't had its first hearing yet in the Senate, but that's potentially moving. Another bill by Assemblymember Connolly, who's from Marin County, would expand wildfire regulations to add more hardening measures taken by a homeowner to take them into account in terms of the discounts that insurers would be required to offer. That's like getting certain roofs that are more fire retardant, upgrading windows and things like that. So those are two legislative initiatives. And I recall from the big fires from 3 or 4 or 5 years ago that one of the reforms we dealt with was the requirement that we instituted that you had to renew for at least a year after an emergency occurring. And we did that. But here's the thing about these reforms, in terms of a legislative solution to what we're facing, is that every time we mandate even what we all and maybe you would consider to be reasonable standards for an insurer in how they do their work, taking into account mitigation, clearing brush around homes and all those things, and the kind of materials that you have in your home, even if we mandate that they have to go back and renew somebody for at least a year, give them a chance to look for other alternative policies, they can make the choice to simply walk away, not do it, because they think that that's going to put an added burden on their own calculations of what risk they're going to undertake for whatever gain they're going to make in premiums that we give them. And so this legislative solution has some significant limitations, just being straight about it, in terms of we can mandate all we want, but if they decide that it's not worth it for them, they can walk away. And that leaves us with a shrinking insurance pool and means everything gets worse. So it's a dilemma for us on the legislative side. We're going to hear from the Deputy Insurance Commissioner, and they are in a pivotal place. That's the biggest, what we would call the Consumer Protection Agency in California, enacted by voters to make sure that we're not screwing all of us in the rates that they were assessing. And so they have a very organized process of considering every rate increase and whether it's justified or not. And it takes years for an insurance company to get a rate increase. It takes them years to get a review and approval. And now you can see why this hole that we're in is pretty deep. But these reforms that he's advancing now we think, put the companies in a position to more fairly determine risk and reward. Part of the problem, I'll be very straightforward about it, is that if you're in leadership in this space, whether it's in the legislature or the insurance commissioner or the governor, do you want to raise people's rates? No, nobody wants to do that. And so that suppression of not a popular thing to do has also contributed to the problem that we're facing today. These companies weren't getting the rate increases, and now they're walking away. And that's a cycle down, right? But that's the situation that we're facing. So I know there's going to be a lot of questions. I know we're going to hear from the insurance commissioner. I can just tell you that we're feeling the pain and the angst that you're feeling, not just here, but across California, certainly throughout my Senate district. And it's not like we're in the foothills. We're not in the mountains where a lot of the horrible fires have taken place. But the analysis of the topography of our area, the hills, our beautiful hills here in Lafayette, and Orinda and Moraga and Danville and San Ramon, those are the assessment is that those are high-risk areas now, that the vegetation, which we love, have made the risk even higher for them. And when you look at the map of where State Farm is pulling their policies from throughout California, you're going to see that. Concentrated here in our area, concentrated in Topanga and Malibu and Pacific Palisades in LA. And these are these beautiful places that we love, but now are determined to be higher risk. And therefore a consequence of companies saying we've got to lower our risk, or we could go bankrupt and insolvent if we have a crisis of floods, of fires, or something of that like. Okay, so there's my review of it. It's not the best news in the world, but it's straight talk, hopefully, about what we're all facing here, and I look forward to the conversation this morning. Okay.
Thank you so much, Senator. So as you heard, you all are facing this crisis on several fronts. One, there is your personal policies, your HO6 policies that you have on your individual units, where you are facing a challenge, perhaps on renewal, perhaps on rate increases, or perhaps on securing a policy for the first time if you just purchased here. A lot of that is what the Senator just addressed, and we will hopefully be hearing from the Deputy Insurance Commissioner shortly to talk about. The other front, as I started off with, is the master policy that ensures the whole, the mutuals, the 22 of the mutuals in the trust property. That policy is in what is called the reinsurance market. And we have today with us our representatives from Gallagher. Michael Gallagher is going to speak to you to talk about that reinsurance and our whole overall master insurance policy and what we are facing with that challenge. So please help me welcome Michael Gallagher with Gallagher & Associates.
Good morning, everyone. So I just first want to start by making a distinction between an insurance broker and an insurance carrier. We are the insurance broker for Rossmore Golden Rain Foundation, so we represent you when we're going to the insurance market to try to get the best pricing in the marketplace for you. We are not the ones that determine your insurance pricing. We're the ones that go out to the market, create competition between the insurance carriers, and then come back to you with the insurance pricing. Louder, okay. We are the ones that represent you. We are not the ones that determine what your actual pricing is. So I just want to make that clear before anybody grabs a scone and starts throwing it up here. So why don't we start with really the crux of what makes your insurance program so difficult. The core principle of insurance is the spread of risk. So insurance carriers like when they have risk that is spread out across a large geographic area. The unfortunate situation for Golden Rain Foundation is that you have about $2.5 billion of property values that are all in one single location. That makes insurance carriers really nervous because there's one event that could potentially take out $2.5 billion of insured values. Lahaina, perfect example. So I do want to make a clarification, not a clarification, I do want to make a point that Jeff brought up earlier. We've done extensive modeling on your portfolio, and we have determined that about half of your property values, about 1.1 billion, could be taken out in a wildfire event, and that is a 1 in 10,000 year possibility. That's how the insurance and modeling industry review catastrophic events. They do it on a likelihood in a certain number of years, right? So a 1 in 10,000 year event would roughly have an impact on half of the Golden Rain Rossmore Foundation portfolio of insurance. To provide some additional context for you, when lenders require on property for organizations or individuals to buy other catastrophic coverages aside from wildfire, an example for you being earthquake, typically they require you to buy a limit at a 1 in 500 year event, right? So that is typically the lender's standard for what they want you to buy in terms of insurance coverage. We are buying coverage at a 1 in 10,000 year event. So we have significantly more coverage for a catastrophic event than what lenders typically require. Now, that being said, it is different when you look at fire risk versus other risks such as earthquake. So that is the core issue that we're facing, is that we have $2.5 billion of wood frame buildings that are all in one single location that unfortunately are in Northern California, where we have seen significant wildfire events, as the senator noted. So that's the baseline for why we're having such a difficult time. To give you a quick overview on Gallagher as an organization, we are a $10 billion organization. We place $3 billion in property-specific premium into the marketplace. We have 40,000 clients. We have offices all over the world. We have about 50,000 employees. Why does that matter for you? That matters for you because we have the ability to access the entire global insurance marketplace on your behalf to look for the most cost-effective and broad terms and conditions insurance coverage that there is commercially available. We show a couple of, underneath that large Gallagher logo, we have a couple of subsidiaries that have very specialty insurance products that we either have currently within your program or we have reviewed for your program to see if they would be a good fit in order to try to offset some of the really difficult insurance renewals that you've had over the last couple of years. You know, for example, Gallagher Re. So believe it or not, insurance companies buy insurance for themselves. So when they place an insurance policy, they say AIG, Chubb, Zurich, whichever the insurance carrier is, once again, they like a spread of risk. They don't want to take on 100% of that risk themselves. So they actually go out to the reinsurance market and buy insurance on their own portfolio of insurance. Gallagher has a reinsurance division, And we have gone directly to the reinsurance market in order to look for additional capacity on your behalf. We also have an organization called Artex, Alternative Risk Financing Exchange. Artex allows organizations to set up their own insurance companies. They're called captives, but in reality, it's setting up your own insurance company so you can pay premiums to your own insurance company and then have claims paid out of your own insurance company back to your organization. At the renewal last year, we reviewed whether or not it would make sense to put a captive in place for Golden Rain Foundation. It didn't make sense based on the financial pro forma that we put together, but just another example of we are turning over every stone when it comes to putting a program in place for you to make sure that it is the most cost effective possible. We have a team in the US and we have a team in London that access both the US, what's called ENS markets, the London ENS markets. They go to Bermuda, they go to a wide variety of insurance markets that are what's called ENS, or not admitted insurance. Not to get too deep into the specifics of that, but as the senator noted, the California State Insurance Commission has set specific rates that insurance carriers are allowed to charge for every line of coverage in the state of California. And those are called admitted insurance carriers. Many admitted insurance carriers in the state of California have said, per the senator's comments, we simply cannot collect enough premium based on the risk to our business if there were to be additional catastrophic losses. And so therefore we have the ability to go to what's called the non-admitted marketplace. The non-admitted marketplace doesn't have to follow the rates that the California State Insurance Commission sets in place, right? And so that is how we have the ability to go ahead and get you coverage while you have all of these different insurance carriers that are leaving the state of California. We're doing that with insurance carriers in the US, we're doing that with insurance carriers in London, we're doing that with insurance carriers in Bermuda. Those are the three primary places that we're getting the additional capacity for you, but we also have the ability to access capacity around the world. So just want to reiterate, the size of your program, the difficulty of your program, Gallagher is going to every possible length, reviewing every possible option in order to make sure that we get you the best coverage at the best price. So here are some of the key highlights for things that Gallagher's done on your behalf. As I mentioned, we have a global team. We have capacity from all over the world. We review a variety of different program structures. There's many different ways to put together the puzzle pieces of an insurance program, and we're constantly reviewing those on an annual basis to make sure that we're doing it in the most cost-effective possible way. We do property modeling, including wildfire. A couple of years ago, the insurance marketplace assumed that if there was going to be a wildfire loss, that it would essentially burn down the entire community. Through the work that we've done in conjunction with Golden Rain Foundation and Jeff, we have really honed in on that modeling and gotten that 1 in 10,000 year event really closer to that $1.1 billion mark, which makes the insurance industry feel a lot more comfortable providing coverage on your behalf because that significantly lowers what their expected losses will be in a catastrophic event. We have market leverage and relationships with every insurance carrier in the entire world. We serve as an extension of the Golden Rain Foundation's team, providing loss prevention services, claim services, valuation services, allocations, et cetera. And finally, we feel that we have a deep and trusted relationship with Golden Rain Foundation and have been working with you all for many, many years and are very happy with the relationship that we have with you all. So let's talk about some of the enhancements and some of the work that's been done over the last number of years in conjunction with the Golden Rain Foundation team to offset the really difficult marketplace that we're in when it comes to both the general property insurance market and then specific to wildfire in California. So if you can imagine the lowest layers in an insurance program, we basically build a tower for your property insurance. At the very bottom layer, those are the layers that are most likely to get hit in a claim, right? You have a small fire, that first $5 million layer, that carrier is most likely to pay out a claim and therefore they charge the most premium. As you get higher up in the tower, you have to have a more severe event for those layers in the tower to get hit. And so therefore they typically reduce the amount of premium that they're charging as you get higher up in the tower. So that first primary $5 million layer is really the most expensive layer that you have in your insurance program. What we put in place in January of 2022, so we've completed now, 2023, we've completed now a full year, is we've essentially put together a program that allows you to pay in premium, and if you don't have losses, you have the ability to collect that premium dollar back. So after one full year of having this program in place, we have, Zach, what's the number? We have $3.2 million of unused premium because we had a good year in 2023, that if we continue to have good years in 24, 25, 26, 27, we put a 5-year program in place, we'll have the ability to give that premium that was not spent on paying claims back to you all. So we're doing everything we can to try to come up with different program structures to be able to make it so that if you do not have losses, that premium's not just gone forever, you have the ability to recoup. If this continues to go well, we'll look at potentially increasing the amount of risk that the organization takes on. Potentially, instead of taking on the first $5 million, we take on the first $7.5. Maybe we take on the first $10 million. Now we want to do this in a slow, cautious, conservative way so that we don't, as the senator said, get over our skis too much. But we feel confident in the fact that we have $3.2 million in the bank after 1 year of a good loss experience in order to fund for future claims. And if we continue to have a good loss experience and we continue to have more and more dollars in the bank for us to pay claims, then maybe we raise that amount up to 10 million. And now we don't have to use the standard insurance market for the first $10 million of your program, which is by far the most expensive part of your program. So that's one item that we've put in place that we're very happy about, that has led to some great results in year one. The second issue is valuations are very important to the insurance marketplace. So if you tell an insurance carrier that a building is worth $800,000 and then that building burns down and it turns out that the insurance carrier has to write a check for $1 million to rebuild that building, they're not very happy because they've been collecting premium on a property that was said to be worth $800,000 and now instead they're writing a $1 million check. So over the last couple of years in the insurance marketplace, particularly with all the inflation in building costs that are a result of what we all saw during the pandemic, as well as just the CPI inflation over the last couple of years, the replacement costs of buildings have gone up significantly in the last 5 years. We've worked very closely with Jeff and the team to make sure that we are keeping your valuations at the market standard so that insurance carriers feel comfortable that the values that we are providing them are actually accurate. So that if there were to be a loss, the claim check that they would write matches what we said the replacement cost of that building actually is. And that does a couple of things. That instills confidence in the insurance marketplace that we are always doing what's right and that they don't have to worry about us doing any sort of underhanded lower valuations. And it also removes coverage restrictions that insurance carriers put in policies when they think that there are undervaluations. Essentially what they'll do sometimes is they'll take away your ability to have a blanket limit. So when Jeff mentioned that we have about $1.1 billion in total limit, that's across the entire portfolio of the Golden Rain Foundation. If we didn't have the valuations proper, they might say that each building has an individual limit rather than all buildings having that single blanket limit. So that was work that we did with a third-party appraisal company this past year called Kroll, and it was very helpful to us when going to the insurance market saying, we've done our appraisals, we've done our evaluations, these replacement costs are accurate. The next, as I mentioned, is we have key markets in the US, Bermuda, London, that have actually come here physically, these underwriters, to see this property. And it may not seem like it's a big deal, but it is really, really important for those underwriters, the people who are actually coming up with what they want to charge rate and premium wise to underwrite your exposure. It's really important for them to come out and see that this community has a lot of fire prevention protocols put in place, that Golden Rain Foundation has the really close cooperation and support of the 5 immediately surrounding fire agencies, as well as being on the border with CAL FIRE. We also have cooperation with 30 or so fire agencies that are in a larger radius. They did a tour of the campus. They saw that the golf course provides a really nice fire break right through the center of the community. And it had a really, really big impact on their ability to provide both capacity, so more coverage at a better price. One example for you is there's an insurance company called Chubb, and they have a team in Bermuda that was originally placing, and correct me on these numbers, Zach, I think they were placing about $400 million in capacity, give or take. And after that, Chubb Bermuda came out to the location here, they increased that capacity from 400 up to 600 million. So we got an extra $200 million in limit by having those underwriters come out here. And that's something that we coordinated very closely with Jeff and team, and it makes a really big difference. So the good news is when they come here, they see that this is actually a higher quality risk than they originally expected, rather than the opposite, which is fantastic. And finally, we are not anticipating any severe changes to the property insurance marketplace this year as severe as previously. So we are hoping that there will be additional competition in the property insurance marketplace to either minimize potential increases at renewal in January of 2025, or if possible, potentially get ourselves a reduction, or look at buying additional capacity for a cheaper price so we can get above that $1.1 billion mark. Very last slide here. Sorry if I'm going over here, Jeff. Just as a last piece of data for you, this is the number of events with over $1 billion in insured losses since 2013. So as you can see, in 2023, there were 32 events in the United States where there was an insured loss of over of over $1 billion. There were 32 of those events in 2023. And these are some of the factors that are driving such a difficult insurance marketplace. The good news is the reinsurance marketplace does the majority of its renewals on January 1st every single year. And what we heard from our reinsurance team is that the reinsurance renewals were much, much simpler to get done, much easier, and the price increases were not nearly as big as what we saw on January 1st, 2023 versus this past year, January 1st, 2024. So that's the good news, that's the silver lining. I guess I was ahead of myself. So for the first time in many years, underwriters are under less pressure to get rate on property, and they have more pressure to go out and grow. In order to grow, you have to be more competitive than your competitor, right? You have to provide better pricing than your competitor, which ultimately leads to price reductions. So we are hopeful that at the January 1st, 2025 renewal of Golden Rain Foundation Rossmore, we will have a better situation than what we have today. Thank you.
Thank you, Michael. We are in good hands with Gallagher and their worldwide team in taking care of this account for us. Next, through the magic of Zoom, we do have Julia Juarez, who is the Deputy Insurance Commissioner for the state of California. She is going to be able to address some of those issues that were brought up earlier in regards to the commercial insurance market, your personal HO6 type of policies. So as we bring up the Deputy Commissioner, please help me welcome her.
Thank you very much. Good morning, everyone. Want to make sure, there we are. It is a pleasure to join you this morning. My name is Julia Juarez. I am Deputy Commissioner for Community Relations and Outreach. And I have the pleasure of speaking with you about what is happening with the market. What are we doing as a department to address these issues, and how that will affect you. I hope that I am able to. I apologize for that. I hope that I am able to share my screen, and we'll be able to share with you our. Here we are. There we are. We have, as I'm sure you have been hearing, we have just many different issues that have been happening for the market. California is the second largest, actually the biggest insurance market in the entire state, and we are actually only second in the world to China. Therefore, all of the major things that happen throughout the world absolutely have something, will have some effect on the state. And so those are the things that you are seeing. Of course, besides the pandemic, all of the different issues that we have seen throughout the world, the increased cost of rebuilding, then the reinsurance issues, which you have heard of as well, have absolutely just devastated the market in many ways. In California, what this means is that the top 12 companies in the state actually provide 85% of the state's homeowners market. So that means that, as all of that, as we're going through all of the organization for the market, we see that those top 12 companies, even though they have, maybe have received already increases in their rates, they are still restricting new business. And I will show you here that of those 12 companies in the admitted market, which is the insurance, the insurance companies that the Department of Insurance regulates, are absolutely, we have seen that we have had major just either decreases in coverage for many policies. Many policies have been stopped or restricted. So of those 12 companies, that is, you can see that even though their rate increases have been substantial, that still has not been enough to lower the risk that they need in order to have their books together. And I just want to show you this, that over the last 10 years, homeowners insurance companies here in California have done actually worse than nationally. So we have seen that their loss ratio in California, it's almost 74%, whereas throughout the country it's 59.7%. The underwriting profit is actually a minus 13.1%. And their direct insurance, their direct profit and insurance transactions is also a minus 6.1%. So the direct return on net worth in California is actually 0.8%, which is, is a stark difference between what we see throughout the country. So that is the background. So how did we actually get here? We have, because of all of these major changes or major issues that are happening to insurance companies, which are global conglomerates, they are absolutely feeling the stress in their books. And because in California, because of Prop 103, sorry about this, we have basically the state has restricted as to how much increases insurance companies can make or request. That has actually just exacerbated the market. So for the last 30 years, we have not really kept up with the increase in costs to cover homeowners. And so because of that, we have seen our FAIR plan, which is the insurance of last resort, just increase to 3% of the market, which is in many areas, and in your area in particular, it becomes the only, the insurance of first resort, not the last one. So what you have seen is that top 12 companies that are, that have a major concentration in California have actually been downgraded in their outlook, because of their risk concentration here in California. So the market itself has been having those major issues. So that is why they are not writing in these high risk areas, unless they can cover the entirety of the claims, their expenses, and of course earn a fair return. So all of that just has exasperated the market as a whole. So of course, that makes that turns into rate filings being a lot more complex, being taking much longer, and then we also have, because of Prop 103, we do have entities who might be able to stop rate filings completely and let them and have them wait for maybe up to 18 months. And so all of those things absolutely have something to do with how our market has just been slowed down. The commissioner 2 years ago worked with all of the different agencies that work with wildfires and made sure that we came up with something that can help bring down that risk. And so we came up with the Safer from Wildfires framework. That is something that we use throughout the state, that everybody in their homes can actually do. And they have very specific things that you can do for each one of these areas. So your home, your immediate surroundings, and then your communities, so that you can get you can lower your risk and then hopefully then help with your insurance. And I know that Rossmore has been doing a lot of work on this. We have seen when the commissioner met with your board in October, he discussed all of this with them as well, and it was very much so something that we know that has been embedded in some of the work that you have been doing. So if you can see, these are very specific things, and ultimately protecting the entire neighborhood is what's really important, because if your home is well taken care of and you are safe, but if your neighbor down the street is not, and they have a fuel load that is going to exacerbate the entire place, everyone will catch on fire. So the work of Firewise USA communities is extremely important in local communities. And so I know Rossmore is actually very much so one of these communities that has taken risk reduction very seriously as well. So that in itself should help to lower the risk, and so then make you a more accessible for insurance. So right now we have the FAIR Plan that is offering discounts for businesses and homes who are in compliance of the Safer from Wildfires regulations. Everyone who does take part of this is able to not only be able to keep their insurance, but also be able to get a discount because of that. The FAIR Plan right now is offering $20 million coverage per location in a commercial policy, which is basically our HOAs. And our HOAs and businesses that have several different buildings as well. So the other part of this is also, I'm sure many of you have heard of, the wildfire risk score, and how insurance companies have said, have used this in the past and have said to people, your wildfire risk score is too high, so we're not going to be able to cover you. If that is the case, then in the past, you would ask, give me, what is my wildfire risk score, and what is, and how did you come up with this? Insurance companies will be able to say, I'm sorry, I can't share that with you because that is proprietary information. And so now, because of the regulations that we have made, it is insurance companies must tell you what your wildfire risk score is, how did they come about it, and why is it that they're using that, why they gave you that score. You now then have the ability to review that and also appeal your score. Come back to the insurance company and say, I have all of these things that I have done to ensure that my property is safe. And if they don't, and if they, they then have to address that. If they don't, the Department of Insurance is available to review the policies with you and go after the insurance company to get answers for you on that end. So now the commissioner is looking at how do we modernize our insurance market so that we can have more accessible insurance, because we realize that this issue is a global issue, that there's a lot going on. However, what do we need to do to work with the industry, to work with our experts to make sure that we have a viable insurance market? Because if there is a major disaster and the FAIR Plan is the only insurance available, the FAIR Plan is basically funded by all the insurance companies. It is not a state program. It is funded by all the insurance companies depending on their percentage of the market within the state. And so if there's a major catastrophe and everyone is on the FAIR Plan, then the FAIR Plan might not be able to take care of all of those premiums, of all of those homes, and the entire market will collapse. So that is not okay. We are not in a place where that can actually work. So that is why we're looking at what can we do to make insurance accessible, make the market resilient, and then of course continue to protect our communities. So what the commissioner is doing is working on the California Sustainable Insurance Strategy. And what that is requiring insurance companies to write no less than 85% of the homes and businesses in these areas that we are looking at, these areas that are flooded by the FAIR Plan because they do not have anything else available for them. So we are working with them so that they, they would have to provide insurance for 85% of that those entire areas. And then we will be returning policyholders who are in the FAIR Plan back to the general market so that we have a more resilient market there. The other part of this is the commissioner is working right now to establish catastrophe models. For the last 30 years, the only way that the department would review everything that came in from an insurance company would be by historical data. So how much have they lost, and then where do we go from here? Well, in California, right, because of all the different losses that we have had, the last 10 years we have had the most devastating wildfires for the entire state, and have been just extraordinary losses. And so that no longer really makes sense, because then insurance companies would only say these many zip codes are not viable for us, and would just drop people, by the zip code. So looking at catastrophe models, now we're going to be able to very specifically look at a home and look at what they have done to harden and mitigate their local communities and the home itself, and we'll be able to then put the appropriate price for those rates. And so looking at what benefits, what discount benefits they can have, and all of that has not been available to consumers. So now we are making these changes to ensure that insurance companies are able to do that. The other part that we have heard from insurance companies is that reinsurance has been extremely volatile. I know that you just heard that reinsurance companies are basically based in Bermuda. Nobody oversees reinsurance, and so it is very much so. Insurance for insurance companies, we must be able to figure out how do we work with the industry to ensure that we are only paying if consumers are going to be responsible for helping to offset that cost, that we are only providing reinsurance costs for California risk, not anything else that has to do with anything else going on globally. So Commissioner has been in Bermuda this year already, has met with all of the different reinsurance companies to try to find solutions to this and work with them to ensure that California is able to provide if we're going to be providing those costs, that we look at those models, catastrophe models, that will only use California risk. And so we're continuing to work on that. And then finally, the last part of this plan is to modernize the FAIR plan so that we can expand commercial coverage for organizations such as yours that may require a lot more than just the $20 million as a whole, but rather looking at $20 million per structure. So we're looking at HOAs, affordable housing projects that are throughout the state that have seen insurance as well disappear. So all of those types of developments that we are we're working on. We understand right now we are at an insurance crossroads. We are at a crisis. And so we are working with the entire industry, with all of the experts, to find out, what can we do to ensure that that the market is viable for future for future generations. So we continue to work with them, and so the expectation is that as we work to increase the availability, then of course competition can come back to the market, and then we can see costs come down as well. So those are the major issues, and I want to just give you an update of where we are on all of these things that we're working on with the strategy. The commissioner has asked the department to get all of these things done within the year. So by December 2024, we must have all of these things in place. So we are right now working on this. We are having a workshop on the catastrophe modeling on April 23rd. And we will love to have you be engaged in that as well, so that you can have your say in that, and what your experience has been. And so, understanding that you have done a lot of work to mitigate in your homes and in your communities, and that should be taken into consideration as well. I want you to have this information for the department, which is, we have experts. We have 1,400 employees within the Department of Insurance that work on insurance issues, not only homeowners, but healthcare, auto insurance, any type of insurance that you may be dealing with. We have experts online and on the phone who are able to work with you directly and find out, how can they help you. Not just understand your insurance, but be able to talk to the insurance company and be able to contact the insurance company on your behalf to find solutions to whatever issue you might be having. So I encourage you to, take down our phone number, our website as well. If you don't want to talk to anyone, we know that, lately people prefer to just chat. We have that capacity as well. So we have, you can do that at our website at insurance.ca.gov, and we are happy to answer any questions for you. Our staff is on the phones 8 a.m. to 5 p.m. every day, and we have a system where you should never be on hold or miss the call. If by any chance we have all of our staff on the phone at the same time, you will get a return call within 1 minute. So we make absolutely sure that you are taken care of, that you have somebody to talk to, and that we're able to help you navigate insurance. As we understand, insurance can be very confusing and very detailed. And of course, that is by design. So we want to make sure that we are available for you so that we can help you navigate all of your insurance needs. So on that, I will stop sharing and will make myself available for questions.
Thank you so much, Deputy Commissioner. We really appreciate your time with us today. Lots and lots of incredibly valuable information on what is going on in the state, so we really appreciate that. Now, ladies and gentlemen, it is your turn. We want to engage with you to take steps. As you heard from Michael Gallagher, he talked about that retained risk layer, that first $5 million layer of our master policy where we are investing and have the opportunity to get some of that premium back, return back up to 85% based on our loss history. That's where you come in. If you can help us keep our losses low, be safe in your community, be safe in your home, if we can have some safe experiences, limited losses, that helps return those resources back to this community. The other thing you can definitely do, if you came in and you saw the table where it had a flyer with a big QR code in it, and it also has a link, this is to the California Association Institute website. They are working to gather input, feedback from residents just like you across the state, across the nation, to help them contact your elected officials to let them know what your personal experiences has been in relation to this insurance crisis. Please take advantage of picking up one of those flyers. When you go to the website, it is very, very self-guided in how you can fill out the form and share your personal experience on how this crisis is impacting the community and you personally. Help make your voice heard. It is critical that we share our experience. With that, we do have a few minutes for some questions. We have been collecting the questions that you deposited with the front here, and Ann is going to pose a few questions. I believe we still have the Deputy Commissioner online. We'll try and get through a few of them. Obviously, we're not going to make all of them, so we will post those question and answers online as well as in the Rossmore News. So,
Great. So what I've done is we've looked through them, so you may not hear your specific one because there were some redundancies, and we're grouping them together to try to get complete answers around certain issues. So I'll start off with Rossmore has an appraised value of 2.1 plus billion this year. The questions are, does this include the land as well, or is it just all the buildings? As the answer helps understand the 43% coverage, and then I have a couple of follow-ups related to that.
Zach, you want to answer that one?
Sure. So the number is actually $2.6 billion, not 2.1, but that is a replacement cost estimate for all of the buildings, all the manors, all the clubhouses, et cetera, all the structures really, right? It does not cover land because insurance doesn't cover land. So that's what the value is based on. What would it cost to rebuild? So it's also different than market value, right? It's not how much somebody's going to pay. It's how much would it cost to rebuild it from the ground up, like, kind, and quality.
So then, how was the decision made not to fully insure these buildings?
It was a cost decision because we worked with the insurance task force here. We looked at that 1 in 10,000 year modeling. We looked at capacity and pricing in the marketplace, and that's what we did.
So let me just add to that. It's not only it's a cost and a capacity issue. So to get to that full, as Michael explained in his presentation, to get to that 2.68 billion, there really isn't capacity to provide that coverage in one geographic location. And we went from 14 million to 22 million just in 1 year. To get to full capacity of 2.68, we'd be adding another 15 to 25 million in cost on an annual basis on top of that 22 million. So we're talking affordability, we're talking capacity. The decision was really made to benchmark that 1 in 10,000 year loss event as a reasonable, very, as I use, robust coverage for this community.
And then also kind of connected to this, why can't we pay for full replacement insurance for the actual residences and lower insurance for the common buildings, the trust buildings?
The trust buildings are, I can't remember the number, maybe $200 million in total. So it's a very small piece. It's a very small piece of the whole thing. So it wouldn't have much difference in the overall pricing if you did not cover the trust buildings.
Okay. Wow, short. All right. My name is Tom Cash, and I'm the Public Safety Manager. And the question I have is specifically to Gallagher. How much did you charge Rossmore last year for your fees?
Boy, not to put you on the spot there. But
Don't worry, this is a trust question.
No, absolutely. I believe our number last year was $350,000.
Yeah, that's correct. And then the other question as a follow-up, do you have a fiduciary responsibility to us? I think they don't understand kind of what you guys do for us, so might be a good idea.
In terms, can you?
Do you have a fiduciary responsibility to us?
We do.
Okay.
Yeah, absolutely. We are not paid a percentage of the premiums that you pay. We have a fixed fee that we pay, or that we are paid on your behalf in order to go and secure your insurance coverage. So we don't have any skin in the game for your premiums going up. We simply want to see them go down and allow you to have full capacity for your program.
Can special assessment insurance on an HO6 policy help residents in the case of catastrophe? And can you describe how the special assessment insurance would work with the building insurance in case we have to rebuild our homes after a costly disaster?
So the special assessment coverage is something which would be on your HO6 policy that we have kind of talked about before. We would strongly recommend that you talk to your individual personal insurance agents when it comes to special assessment. We're not really here to be able to provide guidance on your personal policies. It's best that you actually go and talk to your personal agent about the coverage. Take with you a copy of the declaration page for the master policy. Take with you your whichever mutual you are in, their governing documents. Talk to your personal agent about coverage that's appropriate for you and ask them about that special assessment coverage. So there's two different policies. There's the master policy, which Gallagher provides our brokerage for, and then you have your personal HO6 policy, so covering your personal belongings, your liability, and so forth. You should talk to your individual agent about your coverage level based on the mutual that you are in, based on the master policy coverage, based on your governing documents for your mutual, and ask them about about a loss assessment coverage, and also ask them if you qualify for a discount based on this community now being a FireWise community. So have some conversations with your personal agent. Yes.
Jeff, I'm going to have to leave for another appointment, but I just wanted to close and say thank you for having me. Obviously, my office is here to help if there's something that we can do to help you in your personal circumstances. Those who are involved in FireWise, thank you so much for doing that. That's a really big deal for all those people who are doing that. I've done 2 podcasts on this issue of insurance. I don't know if people are into podcasts or not, but one of them was in November on FireWise and the work in Orinda, Lafayette, and Moraga, and the difference it's making with the fire chief and others commenting about the work that's being done. And lastly, last August, I did a podcast with Insurance Commissioner Ricardo Lara directly about the problem and what he's doing personally, professionally to do something about it. That was an August podcast. They're all available on my website. We handed out baseball cards if you need a link. But anyway, thank you for having me today.
Thank you so much. Thank you for taking the time to be with us today and share all of that expertise. There were those, who has a baseball card? That's impressive. There were those set on your seat, so you have that. It provides the information on how to get a hold of that podcast and further information. So thank you so much for being with us today. Go ahead.
Okay, so we'll continue. So this one really is for the Deputy Commissioner Juarez. Hopefully you can help us with some of this. And I'm going to read this one as submitted because it does tell a story very common to everyone. And I'm going to start with the bottom of their thing. 70% of my HOA's monthly coupon increase related to is due to increased costs of our insurance. At this rate, many of us will be priced out of our homes very quickly. Will the insurance reforms currently in the pipeline lead to actually increasing affordability? They appear to be designed primarily to keep insurers in the state by reducing customer protections and increasing insurers' ability to raise rates.
What we are doing, thank you very much for the question, appreciate it. And I really appreciate the question in particular because there is that whole sense that we are, that we are decreasing protections. And actually what we are doing is particularly working on catastrophe modeling is making absolutely sure that whatever it is that you do to mitigate your home is actually taken into consideration, because right now it is not being taken into consideration. Even though the regulations are in place that were done 2 years ago, and we're now in this area where you can use those, that is it is still very, very low, and insurance companies have not given enough of a discount for those who have done it. So the expectation is that with the catastrophe modeling, we will be able to see very specifically into the surroundings of a home, into the home, making sure that all of it is that everything that you have done, the work that you have done on your roof, still everything else that you have done in your home is actually being taken into consideration. So that is a brand new thing that should be able to make a difference and actually give us the right price. Now, if you recall, the governor did request that this is a crisis, this is an emergency, and so he did request the commissioner to work on this immediately, and so that is why we are moving all of these things. There's many parts to it, and we are moving them all at once. The department has and is continuing to increase capacity to be able to work with the insurance companies and look at their rates and be able to, we hired the actuaries to be able to look at those numbers. We have changed the way that we have allowed interveners to come in and ask for, ask for different things that the department had already asked for. But all that did was actually just delay a lot of the work. And so we have changed those rules now so that interveners must bring in different things that they might be looking at, but only things that have to do with the actual rate request that is being reviewed. And also, the insurance companies are now are going to be expected to turn in complete applications, because that has also been one of the major issues that has slowed that whole process down. Has been because insurance companies would give us information, but then would leave some things out. So when we would ask for more information or details, for what we needed to do, they would just take a very long time to give that information back. So all of those things are being reviewed, are being changed. And so we are modernizing the way that we have been working. And as you know, government works very, very slow. However, Commissioner Lara has made it a point that we have all of these things in place by December 2024. And the expectation is that at that point, insurance companies are, they're working on all of this as well. And that hopefully by the time we get through with all of the different changes, that they will be able to come back and have the information that we need, and we'll be able to move faster. We don't know how long that will take. I know the department will be done by December 2024. The insurance companies then, we're hoping that maybe 6 months, at the most, that it would take for them to turn in, and get everything in place. But we don't, we don't know exactly. This entire time, yes, you have heard me talk about, what are we doing to make sure that the market itself is viable, that there is competition between companies. I have not spoken about rate decreases because we don't, right now, what we're wanting to make sure of is that the market itself is able to provide you insurance, that you are able to get that. And once that is in place, then the work on our part, on the consumer part, is going to be shopping around, making sure that you're getting the most competitive rate. And so when insurance companies fight for your business, that is when rates are, will be going down. So it's going to take some time. And I can't really tell you exactly when, but this is what we are working on.
Are there any risks of our home loans being canceled because we are underinsured?
I don't know that we can answer that question. We certainly know that the community has been deemed unwarrantable by Fannie and Freddie, and those that are coming into the community are not able to purchase with a traditional mortgage. But in terms of what that means in the future, we just don't have that information as of yet.
If our coverage is only for 46% in a 1 in 10,000 year event, what happens if there's a 1 in 20,000 year event and it exceeds our coverage? How do we rebuild the community?
So that is also where we're looking to some legislative help in terms of the disaster relief bills that are going through to make sure that they include support for communities such as Rossmore, common interest developments such as Rossmore, and the mutuals. So it's important that those bills also be supported. So please, when you go out, this is the type of forum that we want to make your voices heard, that we need that protection. But in terms of actual loss and expectations, right now, a loss over the 1 in 10,000 year event would not be covered.
Are we on, oh, sorry, go ahead.
The portion over, I was going to say, the portion over 1.1 wouldn't be covered. So
That's correct, yes.
Yeah.
Are we on an island or other HOA communities like ours in the same situation?
Other HOA communities, particularly in California, are in the same situation.
We had this question many times. I've been canceled by my current insurance. What do you suggest I do now?
Is that for your personal insurance?
Correct. Two in particular was Progressive and State Farm.
As the senator and commissioner both noted, there are many insurance companies that are pulling out of the state of California, and so really it's just looking for whatever insurance companies are still willing to write in the state of California, as well as using access or using the FAIR plan.
We also have
We also have the commissioner.
Thank you very much. We do have on our website, we have an insurance finders tool where you can look for what are the companies that are writing in your area that you can contact. We do have 111 companies in the state that write insurance, homeowners insurance, because of all of the different issues going on. A lot of them have stopped writing new insurance. However, we do have about 30 to 40 insurance companies that continue to do so. And so I would suggest that you go in, look at, plug in your information and see what you can find there. However, we also have top 10 tips for finding residential insurance within our website. And one tip that I always tell people that I find to be the most important one is we're very used to going to our local brokers or the folks that we know, right? And asking them for assistance. And the issue is that this is a business. And ultimately, insurance companies, we have heard of insurance companies who have had people in their books for 20, 30 years and dropping them because it is no longer feasible for them. So please don't feel bad for insurance companies or for your broker. Go look for different insurance. And what I suggest in particular is go to insurance brokers in other areas of the state, because maybe the brokers that you have been working with have been working with insurance companies or different groups that are oversaturated in your local market. And so they have way too much risk and they are not going to be writing there anymore. But maybe an insurance broker in San Diego or in Los Angeles might be able to look at their different their books and then say, well, I don't have too much risk in this area. I can afford to take that risk. So that's something that maybe most people don't think about, but it might be a really good opportunity for you to find the appropriate insurance at that time.
Great. How about one more question?
Hold on, we gotta pick the one that's. No.
Please stand by. All right, here, let me phrase this. In the beginning, Jeff, you said that our collective is made up of 22 HOAs, mutuals, right? And one GRF. And what would happen if a mutual decides to go out on their own and shop for their own insurance?
So when we talk about the fact that in order to put together the master program for all of the HOAs in GRF, we shop the entire global insurance marketplace. So every insurance carrier who has appetite to write the master program has already been approached. And so they've already seen every single individual HOA as part of that master program. So if we were to pull an individual HOA out of the master program and try to shop it independently, you would be going to the same insurance markets that are already on the master program. And so they would basically be saying, now we have double the risk in the same location. That's the issue.
So is it possible? Can they do that? Can an individual mutual shop the market? Yes, but as Michael explained, we're stronger together, to borrow a common term. So I want to thank you all. This is an incredible turnout for this event. I want to really thank you all for taking the time, for getting involved in this issue. Please continue to stay involved. Take the opportunity to share your story. Get involved with your mutual. Get involved with all of those hardening efforts that are taking place. You are the ones that are going to help us solve this crisis. So thank you. We will answer all those questions that we received, even though we didn't get to them today. But thank you for coming.